How long does it take to analyze stocks? That's a very good question. It depends. It depends if you want to go deep on the situation or not. It depends if you are a serious investor or not. My name is Christophe Nour. I've been investing in stocks for almost a decade, and I have achieved a performance of 25% per year. And I like to go deep for stocks. So how to do the analysis? In the first part of this video, I will explain the process, the different steps of the analysis, so you will clearly understand what I mean by analyzing stocks. And in the second part of this video, I will tell you how I see the situation and if you have exceptions to the rule and how it works in practical terms. So, okay, let's say you want to analyze a stock. You run a screener, for example, and you have some metrics, or you find an interesting stock on X, on Twitter, and you want to do the analysis. The first part of the analysis would be to go to Guru Focus. You can check, it's a free website, and check the financials here. If you like what you see, if you like what the metrics are, depending on your style of investing, for example, if you are a growth investor, you want to see growth. If you don't see any growth, the analysis stops here. The analysis, if you are a value investor, and you see that the company has been decreasing earnings, has a lot of debt, has a high PE ratio, that doesn't generate a lot of cash. If you're a value investor and the stock you are looking at doesn't generate any cash flow with the bad balance sheet, bad capital allocation, the analysis stops here. So the analysis can be 12 seconds. Now, let's say you are a growth investor and you like what you see. I took the example here with TPL, Texas Pacific Land. I'm on Guru Focus. I mean, that could be any example, but this is just what I have at the moment. You see some good balance sheet, a lot of cash, no debt, some good growth. This is the revenue growth, net income growth. If you like what you see, you can go deeper. What do I mean by go deeper? It means getting to know the business better, the different segments of the business. For example, for TPL, they produce revenue thanks to different segments. You have royalty, land uses, water segment. You understand the different segments. In other words, go to the annual report of the company, Texas Pacific Land annual report, and you read. You read what is happening, how does the company work. So that can take some time. You can either like the investment. If you read for 1 hour, you like what you see, you can continue. Or if you don't like what you see, you can dismiss it. The goal of the analysis is to be as fast as possible. The goal of the analysis is to dismiss the investment idea as fast as possible. So if you don't like what you see at any step of the analysis, if you don't like what you see, stop. Go find something else with your life. Do something else. Find another business. If you don't like what you see, run. Run. Be a harsh grader for stocks. That's how you can minimize your mistakes and generate a strong returns. So if you check the annual report and you have understood the different business segments, are you sure? Another question, are you sure? Okay, they have 3 business lines. They generate money for this and this and this. For Google, Alphabet, for example, you have Google, the Google Cloud, and the other bets with the Waymo, with the cars, autonomous cars, etc. Okay, do you really understand this? What are the margins for the different 3 different segments? What is the growth rate on average for the different segments? Okay, which one is the most profitable one, the better tailwind? See, okay. Now maybe you want to, instead of looking at the annual report, that can be a little bit time consuming, you can check the articles online. You have websites on the internet, Seeking Alpha, Value Investors Club, where people did analysis of these stocks. They wrote some good analysis. You have Substacks. Read what is happening to the stock, how the company operates, and I guarantee that if you read 10 analyses of this business, you will understand very well what they do. The next question for you is, after reading all this stuff, do you like it? Do you understand it, and do you like it? First, do you understand it? Sometimes you will see financials on Guru Focus. You will say, okay, come on. And then it's a cyber security company, and you don't really understand how they make money, the customer retention, the churn rate, how does it work, the tech. I mean, cybersecurity is a big deal. So how do you really make money? Subscription business, one-off business, hardware, software, how does it work? If you can't understand it, that's fine. dismiss the investment idea and go do something else with your life. You have other businesses, and if you understand the business, do you like it? Sometimes you want to invest in businesses with a recurring business model. That's more recession proof, that's more stable, recurring, that's you can forecast the recurring revenue. Sometimes the businesses are not recurring at all. It's a one-off event, and then one-off event, big contracts. Maybe you don't like it. Maybe you want a recurring business model. Maybe the business is currently changing from a one-off business model to a recurring business model. Oh, interesting. So you can expect more margins, you can see. And as you will do this exercise of, of analyzing, quick math, quick segments, analyzing, you will have models, mental models in your mind, in your head. So you will be able to detect patterns of, okay, this reminds me of these other businesses that I checked 3 weeks ago. Okay, this reminds me of this one and this one. And you will see that as you do more analysis, more and more, you will be an expert and you will dismiss the investment way quicker. So it's a complete flywheel effect. And I know it. I've been doing this for 7 years, 8 years, or even more. It's a flywheel. So now I detect stuff. I say, okay, it makes me think of this one. It makes me think of the past business I analyzed 2 years ago. That's fine. So don't worry if it takes some time at the beginning. The goal of this video is to explain how long does it take. So the first dismissing point is if you don't like the financials, it can take 12 seconds. Now you go to the second step of dismissing the investment idea. I would say 1 hour, 2 hours, you can have a rough sense of what the business does. In 2 hours, that's fine. Now, if you continue to understand and like the business, what do? You go deeper into the numbers. So you go to websites such as FinChat, link in the description below, like Stock Unlock, link in the description below. I have like referral codes. If you want, you have discounts if you click in the description below. And you can check what the past financials have been for the stock. Revenue, margins, earnings, net income, buybacks, dilutions, capex, blah blah blah, cash flow, all the stuff you see online, all the analysis. And it's like the other stuff. The more you do these exercises, the faster you will be. So actually it doesn't take that much time. In one afternoon, that's done. So let's say 4 hours. You'll see, okay, compare the numbers, okay. And what is the next step of the analysis? If you still like the number, you can check the moat. Spoiler alert. A moat analysis can take a while. You have some metrics to check if a company has a moat. For example, check if they have a high gross margin over time, sustainable high gross margins like 50%. And you can check if they have a sustainable return on invested capital, ROIC. High, like above 15%, 20%. If they have ROIC above 20% for 10 years, that's maybe a sign of a moat. But you have some qualitative analysis to do. That you have to go deeper, some blogs, some articles. That's also what I teach my students. Doing the analysis is a little bit tricky if you analyze a stock that is way out of your circle of competence. So advice number 1, stay within your circle of competence. If you know how the music industry works, you know Spotify, you know Apple Music, you can compare, you can see how the business model operates. And if you use Spotify, you listen to music on Spotify, you know the churn rate, the customer concentration, if they have discounts, what is the user experience, do the customers have the Spotify and Apple Music and Amazon Music? You see the behavior of customers. This is part of the moat, analysis of the moat. You want to see if the company is better than average. Basically, the goal of the moat is to check if the company has a competitive advantage. And if you are a customer of the company, you know if they have a moat, basically. For Apple, iPhone, I know they have a moat. If my iPhone breaks, I will buy another one. I won't even check the Pixel from Google, the Pixel smartphone, or Samsung. I don't care. This is a beautiful ecosystem and a moat. I won't even look at the Samsung webpage. And even if Samsung, they have a discount, 50% discount offer on their phones, I won't even look at it. I don't want. So that's a moat. Now maybe you want to dismiss the investment idea because you think that this business doesn't have a moat. So yeah, maybe you can dismiss the investment idea here. It will maybe take you, either one day or a couple of days. And I'm telling you, the analysis of a mode, the ecosystem, can take a while. And after you've done this analysis of management, see if the management is a crook or not. See if the management is honest or not. I mean, that can take either 10 minutes or 10 days. I don't know if you have a lot of interviews from the management or not. Sometimes you have nothing about the CEO, so it's easy. In 10 minutes, that's done. And sometimes the CEO was prosecuted for this reason, was in a trial for this and this reason, a past case. I've seen many stuff. For example, I don't know if I'm allowed to say this on YouTube, but okay, let's say this. You have a public company with battle in the family, and in this battle, legal battle, there was someone that died. I don't know how how strict YouTube is for this, but yeah, you have a lot of interesting stuff, and if you have a murder in the family of a business, wow, that's something shocking, and you want to go deep, like big due diligence on this one. And I spent days analyzing what happened here. Can you trust this person? For what reason? Is it real or not? So documentaries, check everything online. If you are a curious person, that helps. If you can check. Spoiler, I didn't invest in this business. I was not comfortable in the situation of battle, family battle. Okay, now you have the fundamentals, analysis, growth, competitive landscape, etc. You know a lot about the business. It may take you a couple of days to really understand everything. The last part is the valuation. First, to do the valuation, you may think what is the growth rates for the business, the forecast of the free cash flow for the future years. And then what is the proper valuation, the proper multiple, PE ratio, price to free cash flow. What is important, what is not important, doesn't matter, doesn't matter. Put your discount rate 10% and you will be faced with a difficult situation. You put your assumptions, you do a DCF, discounted cash flow model, and you see, is the business overvalued? Is the business cheap or expensive or fairly valued? Is the business cheap or expensive? That's your time to shine. That's your time to buy the stock. After a couple of days, that's fine. You have made your decision. That's pretty decent. You can start to position in your portfolio. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. What if the stock is expensive at the moment? You put it on your watch list, you put a target price, and you say to yourself, okay, I've done the analysis of this one. I don't think I will buy it at this price, but if it drops in the future, I will buy it later. So add it to your watch list. Do you stop the analysis here? I don't think so. Do you stop the analysis here? I don't think so. We are living in a moving world. So in 6 months, maybe the business will have changed. Maybe the CEO will change. Maybe the mode will change. Modes are never stable. Modes are either shrinking or developing, widening. So modes are living entities. Businesses are living entities. And the same way we look at living entities, animals, you have the same thing. You have to monitor your businesses. So when I say put the stock on your watch list and monitor it, I mean it. And maybe you will not buy the stock now because it's expensive. Maybe you will not buy the stock in 6 months because in 6 months that's still expensive. Maybe in 1 year that's still expensive. But maybe in 2 years it drops, you can buy. So I would recommend to continue to monitor this business. Continue to read about the business. And this is linked to what I said previously. If you are a curious person, you will enjoy reading about the company. If you love the business model, if you love the management, that's great. That's just fun to read the biography of the founder, to watch a documentary about the company. That's just fun, and it gets you smarter. You become smarter when you learn a lot of this company, this industry. That would be something cool. So that was for the first part of this video about explaining what the complete process is. The second part of this video was tips, practical tips I already said it, but be a very, very harsh grader. I dismiss 95% of the investment I found, even more. I say no, not that deal. I can even fast forward to check the valuation first. If I have a wonderful business model but it trades at 100 times earnings, I'm not interested. That's it. End of business. So be a harsh grader. You want your first dismissal period like to be 12 seconds. You want to go to goal focus and dismiss the investment idea. After this, check the fundamentals, check the moat, check the competitive landscape. And my second advice is check the competition. If you invest in Apple, you want to check companies similar to Apple. If you like the margins of Apple with their products, okay, what are the margins for the Google phone, the Pixel phone? What are the margins for Samsung phone? You will see that Apple is much, much more profitable than competitor. Oh, maybe you have a moat here. After this, they increase their prices every year. You have a pricing power. And if my iPhone breaks, I will buy it. And if the price of the iPhone has gone up 10%, I don't care. You have pricing power. Pricing power is if you increase your prices of your products, will customers complain? Or will customers buy? Will it prevent customers from buying? It will not. If the price of an iPhone goes up 20%, I would not consider Samsung or Pixel. I will still buy it. That's pricing power. You can understand this. Another tip that is not often talked about on YouTube is to check what the insiders are saying about the business. You have some website. I have used one in the past called Mosaic. I don't know if that's convenient here. I don't know if now it's a paid service. But Mosaic does a compilation of interviews from insiders of a company. For example, if you want to get invested in Apple, you have past executives of Apple that will do an in-depth interview and talk about 1 hour of their business models, the different margins, the models, the chips coming from Taiwan, China, Foxconn, how everything is working, what are their main challenges, some stuff that you can't find in the annual report. You will find specific information from inside the company, like proper insiders. That's legal, that's public, and that's the way companies work. When I analyze TPL or Fair Isaac, it helped me a lot understand better the business model. So that could be an additional tip for you. If you struggle to understand the business model, and you want to still want to go deeper, you can check this. You will have a different view on the business. And the third tip, and after this I will leave you for this video, is when you do your valuation, be very conservative. Don't be very greedy. Be conservative. Don't think that the company will have explosive growth. And if you take into account all the tips I've given you in this video, you see that a business analysis can range from 12 seconds to a couple of months, if not a couple of years. If you don't have a good price for the stock and it's still expensive. I have stocks on my watch list for the past 6 years that are here, and I'm just waiting and see. And I'm here with my baseball bat, waiting for a fat pitch, and I'm just waiting, and I'm not in a hurry. I have other opportunities. That's fine. But when we will have a major crash in 2025, 26, 27, and the stock will get crazy cheap, I will have done the due diligence, and I will swing. That's the hardest part of investing. That's patience. Doing the work for nothing. You just wait. You wait for the fat pitch and you swing big, and that's how you make a lot of money. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address, just click the first link in the description and I'll see you on the other side.